Hello and welcome, What the Finances, to another episode of the What the Finance podcast, where we talk to experts to help gain a greater understanding about what is happening in the world of finance, investing, and markets. So, in today's podcast, I'm happy to be welcoming Jim Lewis, who's the co-founder of Wall Street Silver. So, Jim, thanks for joining the podcast.
All right, thanks for inviting me. I appreciate being here.
No problem. So I guess when people think about, WallStreetBets, they're thinking Gamestop, AMC, trying to bankrupt the hedge funds. So, where did silver come from?
Well, we a lot of us who are on Wall Street Silver, we were also on WallStreetBets back during that time frame in late 2020, early 2021, when that whole GameStop thing was going on. But GameStop was pretty much, a lot of people, some of the people are still obsessed even to this day with GameStop. But by late January, it was all in the media. GameStop had made this incredible run into the 400, from $2 or $3 to 400 something dollars. It was a crazy short squeeze, but it was played out, right? It was over by late January of 2021. Stock was already back down in the 300s, 200s. It was over. And a lot of us were like, all right, let's talk about some other potential stocks for a short squeeze. And one of them was First Majestic, a very major producer of silver. And the short interest on that stock was 40% of the float at that time. And it actually worked. We were talking about it and it was getting play and it was being mentioned in the media and it was trending. And we ran that stock up from like 12 to into the low 20s, like $23, $24 a share on First Majestic. But then something weird happened on WallStreetBets where they thought it was a plot by the hedge funds to distract everyone from GameStop. And so the moderators of WallStreetBets started banning people who were talking about, anything else. The silver or silver stocks or the mining companies that we were talking about. So Ivan Bayuki, my co-conspirator, and he started Wall Street Silver on Reddit, and I was right there with him on day one as a moderator with him, and it just took off and was very successful right away. Had 40,000 members, and now it's up to 200,000 today. And we got a lot of play real quick. And so we used that. We started a YouTube channel. We started a Twitter account. Those are huge now. The YouTube channel's up to 50,000 subscribers. And most of the videos get 15 to 30,000 views on YouTube. The Twitter account's up to 160,000 followers. Telegram's up to 12,000 subscribers. So that what started on Reddit is now on YouTube, Twitter, Telegram, and other platforms. So it's just sort of morphed into this other thing that's, we've captured this audience for silver and gold topics that expands way beyond any Reddit at this point.
Yeah, definitely. And I guess, were you already interested in silver before starting this?
Yeah, I was actually an investor in some of the different mining stocks, but mostly the gold ones, funny enough. My investments were in some gold stocks. And my interest in silver was kind of more recent. So my interest in silver is relatively recent. Only in 2020 did I know some people have been investing in silver going back decades, but I'm relatively new to the subject space as a silver investor. It only really started making sense to me in March of 2020 when the Fed went back to 0%. In the middle of the COVID crisis. That's when I thought, all right, this is the time for precious metals again.
Yeah. And was it that, the Fed action, I guess the macroeconomic things that we've been seeing around the world over the past few years that have sort of influenced you to get into silver? Is that sort of your theory behind it?
Well, I'm not a long-term gold bug. I'm not a long-term silver bug. I haven't been doing this for decades like some of these people who, just been doing this forever. I'm relatively new to the concepts. And it's only when the Fed went to 0% and started massively pushing QE again in March of 2020, so a little bit over 2 years ago, did gold and silver make sense to me.
And why was that?
Well, if you look back in time in history, like the previous huge gold run in 2008, when the Fed goes to 0% and starts massively printing, massively pushing QE, that's when gold and silver perform. And that's exactly what did happen from March of 2020, when gold was at, I think, $1,500 an ounce. It ran up to $2,000 an ounce. And a lot of the gold mining companies doubled or tripled in that time frame. So the theory behind it was 100% accurate. Now, what's been surprising is that we've continued to have crazy central banking policies since then, but gold and silver have not performed as expected. But I look at the overall market of housing or tech stocks and the bond market. None of those make sense right now either. I mean, I don't think anyone wants to be long bonds right now with the Fed tightening. That just doesn't make sense. Tech stocks have been a disaster the past, year or so. The housing market looks ready to, start getting weaker now that they're raising mortgage rates. I mean, does anyone really want to buy a house at this price? Right, and with a 6% mortgage? I don't know. The housing market looks ready to take a fall. Commercial real estate, same thing. A lot of companies are dialing back on their rented space in the commercial sector simply because more people are working from home, so companies don't need as much commercial space. So you look at everything in the market out there and what's working and what's not working. Well, I'd say the opportunity in gold and silver, or the mining companies also for gold and silver, or any commodities, not just gold and silver. Copper looks great right now. Lithium looks great. Uranium looks incredible. I'm invested in one uranium stock that's up 600% right now for me in the past couple of months. Uranium looks like it has a huge runway to go ahead of it. So, everyone's having these energy crises all over the world, and countries that weren't even considering nuclear are now putting nuclear back on the roadmap. So uranium's got a huge future ahead of it.
Yeah. So do you think there's obviously talk about a commodity super cycle. So I'm guessing that you're thinking that due to certain demands, due to certain structural changes in terms of energy usage, supply, etc., that we will see a commodity super cycle. Is that sort of your hypothesis?
Yeah, I'm of that feeling. And it's not just buying the physical commodities. The best way to really take advantage of the super cycle is the stocks, the mining stocks, the exploration stocks, or even better, the royalty stocks for the commodity companies. Because the mining companies, they're exposed to labor inflation or energy inflation, so their margins might not be there if inflation's high, right? Yes, they're getting a higher price for the commodity that they're mining, but labor and energy, diesel prices could eat up all the profits. The royalty companies, though, they just get their percentage of the royalties coming off the project. They're not exposed to the expense side of the equation. So that was explained to me in the past year or so as I've interviewed more and more people for my channel, that the royalty stocks are probably one of the safest ways to play this inflation game.
Yeah, and I guess as silver goes up, they're making a greater percentage, or whatever commodity they're making a greater percentage.
Yeah, whatever commodity they have a royalty. We're talking wheat and precious metals, those types of companies that own royalties on these projects. They get their 1% or 2% or 3% of the production because they helped finance it earlier. They took the risk of financing these projects at some earlier stage. But so they get their 1%, 2%, 3%, whatever they negotiated. They get it no matter what without the expense. It's like right off the top, you produced, $1 billion worth of gold this year. You owe me 1% of that. Whatever that, 10 million. Let's say it's a 3% royalty on $1 billion. They get $30 million, but they don't have to pay for any of the labor or any of the diesel that went in the process of mining that. The royalty companies really are the inflation-proof way to take advantage of this process.
Yeah, so they're really like angel investors, I guess, in these mines. They're funding it, just helping
Yeah,
fund it
yeah.
to start with, and then yeah,
Yes, some of these early stage junior producing miners, they're not bankable. I mean, they don't have enough history or of profits to get a bank to give them a loan because it's too high risk. You got no history of revenue or profits, and mining is a risky business. So royalty companies that are willing to step up and write that check when nobody else will write the check. All right, well, they're taking the risk. Well, they're going to get the reward. And that's like, all right, what, well, depending on the size of the deal, like, some of them are 3%, but yeah, most of them are like 1 or 2% a royalty, but everything's negotiable in those things.
yeah, definitely. And I guess the companies that you're looking at, are they mainly in North America, or do you sort of look further afield, like maybe Australia, South America?
Most of the ones that I invest in are listed in either Toronto or Vancouver,
Okay.
just because that's where my brokerage account is set up for there. And my brokerage account can't even invest in Australian companies, but
Yeah.
some of those Australian companies come and get listed in the United States or Canada, so because they want access to those markets. But most of the companies I think I'm invested in are Toronto or Vancouver based.
Yeah, it's interesting. And do you have so your portfolio diversification, I guess, is it mainly sort of balance between the actual metals and then the miners and sometimes some of those royalty companies as well? Is that sort of
Yeah,
how
I
you
have.
look to do it?
I do own physical silver. I won't. I don't want to say how much.
We can see that in the
It's in,
back.
it's in a lake, and there's alligators in that lake, so I'm not worried about anyone finding it. I live in Florida. That's all I'm going to say about where my silver is. But
Yeah,
yeah, I
anacondas
have
and
a
alligators.
combination of physical silver and my portfolio of companies.
Yeah, definitely. Awesome. So, yeah, uranium sounds quite interesting as well. So I guess for what you're looking at, there's a further adoption of nuclear. Is what a lot of people went off it, and now you think that all these countries are going to go back on it.
Well, I interviewed a guy named Rick Rule he was the CEO of Sprott, and a lot of people who follow commodities know who Rick Rule is. And he's been talking about uranium for a long time, a couple of years, and no one paid attention. He was picking up all these uranium stocks at just ridiculously cheap numbers. And now all of a sudden uranium's hot, and he's, up massively on all these companies that he owns. And, there's been this overhang in the uranium market where, remember that tsunami in Japan that knocked out Fukushima?
Yeah.
So Japan shut down all of their nuclear power plants for several years, but they had a huge amount of stored uranium fuel in Japan that was just sitting there unused. And it doesn't go bad, it's just sitting there, right? All these, I don't know how many they have, 15, 20, 30 nuclear power plants are just sitting offline in Japan. And the big overhang in the uranium market was, all right, are they going to dump all that uranium fuel, all those fuel rods back on the open market? And so that's going to crush uranium prices. I mean, it was I don't know the numbers off the top of my head, but it was a massive amount of uranium fuel sitting in Japan. Well, then earlier this year, Japan made the decision to start turning on their nuclear power plants again. I guess the political will and the cost of energy with natural gas was getting so high that they said, all right, well, we've got these nuclear, the population and public opinion had moved to the point where turn the nuclear back on. So I think a good number of those nuclear power plants are now back online. But what that did was it removed that question of all that fuel, all the nuclear fuel, uranium fuel rods that were in Japan. It was no longer a question mark on where that would go. All right, well, it's going to stay in Japan and be consumed and used. There's not that overhang of a ton of supply coming back on the market for other countries. And so when that happened, uranium basically launched to much higher levels. And now everyone's talking about building new nuclear power plants. The United Kingdom has announced a couple. The Netherlands has announced 2 nuclear. China's been building for years a bunch of new nuclear power plants. The United States has a couple that are in the works. France is building a new generation of nuclear power plants now. Even Germany was scheduled to shut down their final 3 nuclear power plants by the end of this year. They just this week decided, we're going to leave them online. So even anti-nuclear Germany is now making the decision, we're going to leave the nuclear power plants that we still have running. And I guarantee you, if things get really bad, they're going to say, we need to build some new ones, right? It won't. And when Germany does that, it's all right. Nuclear is here to stay. So and here's the thing about uranium. It doesn't matter what the price of uranium is, because the cost of the fuel for a nuclear power plant is negligible. The price of uranium doesn't matter because it's such a small percentage of the overall cost. So the price uranium going to $200 a pound is totally feasible. And the mining companies for uranium would just be raking in money if that happens.
Yeah, and I think we've seen, with uranium, with copper, with all these commodities, there's been a real lack of investment over the past 5 or 10 years actually into production in the future. So that's almost, there are going to be massive supply shortages coming up.
Yeah. The most interesting metal where is tin, actually. Tin prices have been going through the roof the past year. And one of the geologists who I like to interview is Quentin Henney. And he told me, we forgot to look for tin for 30 years. It's like all the tin mines are being depleted now, and we forgot to look for it. And no one was really focused on it because the price of tin was so low. But now we have a huge shortage of it. And there's a lot of things you can't make unless you have tin. So, there's all sorts of opportunities in commodities with the right exploration or production companies.
Yeah, definitely. And I talked to someone recently called Peter Kraut, who's I think he's released books of the Great Silver Bull and a few other things. Yeah. And he's talking about how silver production, only 25% of it is actually from designated silver miners. The rest is actually
primary silver mines. Yeah.
Yeah, exactly. And the rest is actually sort of from the people mining for other stuff, and they just get silver as a byproduct.
Yeah.
So that's actually even
a byproduct of lead, zinc, copper, and gold mining. But the thing is, we're running out of silver. It used to be that the primary silver mines produced 35-40% of the silver, and the byproduct was, I think it used to be much higher, but now it's down to only 27% is coming from primary silver mines, and the rest is all byproduct. And it tells you all the big silver mines have already been found and they've been depleted. And it's becoming tougher and tougher to find, high grade silver. Silver is becoming much lower grade over the years. And we're facing some problems. And that has huge implications for the solar industry, for electric vehicles, electronics. Lots of silver used in electronics. So silver is the most electrically conductive metal on the periodic table. So there's no substitute. I mean, copper, yes, conducts electricity also, but not as well. So if you have high performance applications where you need that performance, silver is the only option people really have.
Yeah, definitely. That's so important. And as you mentioned there, sort of solar panels, and if you look at where the energy is going to the future, it's going to be a lot more needed.
Yeah, I agree. That's why the investment thesis I've been following of silver, physical silver, and the miners, it has that inflation perspective of the central banks are crazy and doing all sorts of crazy things right now to destroy our money supply and cause huge inflation. But there's also the physical shortage side, where there is a physical shortage coming in the next couple of years.
Yeah, and I guess why don't you think we've seen that sort of, push up in precious metals, especially since we have seen inflation and, I guess there's been a lot more risk potentially in the markets at the moment. So why don't you think we've seen that in the last 6 months? Do you think it's just a lag?
I don't have a good answer for that. I thought a year ago that silver would, gold would be at 3,000 and silver would be at 50 by now. It just makes no sense to me why they're not. Maybe there's a little manipulation going on. Maybe people just aren't recognizing it. The media seems to not want to talk about gold and silver at all. So And maybe crypto's been a bit of a distraction also. Some people who might have otherwise bought gold or silver were maybe distracted into crypto for the wrong reasons. I don't know.
Yeah, it'll be interesting to see sort of what happens in the future. So are there any indicators that you're watching to do with silver or other commodities where you think if they, turn a different way, or I know there's some ratios to do with gold and silver and I think Dow Jones and silver. Are there any other ones that you're watching where if it turns the way
Not
you're excited?
ratios. I don't really trade off of ratios, although the current gold to silver ratio would tell people gold is expensive, silver's cheap at the current ratio compared to where it historically has been. But I'm watching more what the Fed's doing, because the Fed is raising interest rates right now, and that's holding back gold right now, probably. But at some point, right now, the Fed's fighting inflation. All the political pressure is on. We have to fight inflation, fight inflation, fight inflation. At some point, the economic numbers are going to get turned worse. Unemployment's going to go up. You're already seeing the mortgage numbers declining, so the housing market's probably pretty weak. When unemployment goes up, or we have a second quarter in a row, maybe in a couple of weeks, the second quarter GDP number comes out. If that's negative, that's 2 quarters in a row, and we're in a recession. Well, then the political pressure maybe shifts. Oh, we got to save the economy now. So then the Fed's like, well, we have to stop raising rates and maybe lower rates. If that happens, inflation's off to the races, and gold and silver, I think, launch much higher. So I think a lot of people are waiting for that right now.
Yeah. So you think, I guess, and if that weren't to happen, then they were to continue to raise rates, I guess, once the central bank breaks something in the economy, in the markets, I guess that's where we'd really see the benefits.
Well, then they're going to come, if they really break something, they send us into a depression, perhaps, if they keep raising rates. Then they're really going to break something. What does it take to get the economy going again? The last time for COVID, they spent, $5 trillion. They raised the balance sheet at the Fed went from 4 trillion up to 9 trillion. What's it going to take next time? Another 10 trillion? I mean, what are they going to have to spend to get the economy off of its knees next time? And, silver and gold are what will probably launch in that scenario. And a lot of commodities. It won't just be silver and gold, all physical commodities. There's so many dollars floating around, but the supply of the commodities is not going up to keep up with it. So, that's the classic inflation theme is, all right, if there's more dollars chasing the same number of assets, well, then the price per unit is going to go up.
Yeah, as you said, there's so much demand for all these commodities, and unfortunately, the supply is not going to be there in the coming years. But I guess Wall Street Silver is I think they're quite famous for the silver short, which is I think that got quite a lot of news.
It got a lot of news, but then it petered out. So I don't know. I think we're not going to be able to pat ourselves on the back until silver's back above 30 and going to 50, and then we'll all be able to go, yeah, we were right. But right now, we don't have anything where we can't really brag about anything right now. We're just
But how did that, I guess, the short squeeze, how did that sort of come across? Because it did, I guess it made a few people
it
quite
worked
concerned.
briefly. We drove silver from 25 to 30 in 1 week. And a lot of silver mining companies, doubled in that week. So it did work briefly, but then they came out and they played some manipulation games with supply, some paper supply, and they brought it back down artificially. But we'll see what happens. I think it'll happen again, but now's not the right time because people aren't really paying attention right now. So we don't want to waste our ammunition trying to push another silver squeeze before the market's ripe and ready for it.
Yeah, definitely. And I guess, do you think there is a lot of manipulation in the silver market?
Oh yes, I think there's a ton of manipulation in the markets for silver and gold, and a lot of different commodities. I think we saw it in the nickel. There was a nickel squeeze in London a few months ago, and they froze the market. They closed the nickel market in London for I think it was 2 weeks until they could figure out what to do. And a lot of confidence was lost because everyone saw what was happening, and it totally crooked shenanigans happening at the exchange.
Yeah, if you're big enough, then they can just they can write off your losses basically.
Well, the thing is, the London Metals Exchange, the LME, is owned by a company in China. And the person who was caught short and getting hurt was a big player in the nickel market in China, a producer, major producing company. And that guy who started that company was the main individual who was getting hurt in the nickel squeeze. So they literally changed the rules to save him. And now he's got a huge profit on his nickel position. But they literally manipulated him into that. It's really shady stuff happened in London at the London Metals Exchange.
Yeah, it's absolutely crazy to think. So, we've talked about so many commodities. Are there any other assets that you're keeping an eye on, or are you mainly just solely on commodities and equities?
I'm playing this commodity super cycle right now. 100% of my portfolio is in silver, gold, uranium, copper, and lithium. I am totally invested for the uranium silver cycle.
Are you concerned about one thing I'm a bit concerned about, because if you look at the last copper sort of bull run in the early 2000s, is very, very much on the back of Chinese demand. Are you concerned that potentially with a Chinese slowdown, it might not pick up, or do you think maybe the West will come in and sort of take that demand due to?
Well, there's two things going on here. Yes, that's a risk, recession, but then we come out of recession at some point too, and it's back. But there's also a copper supply problem. The biggest country in the world for copper supply is Chile. And Chile has a new government that's very socialist. They're rewriting their constitution right now. And they're not eager to approve projects in Chile right now. So there are some supply problems in the copper market too, coming down the pipeline.
Yes, it's focusing on both demand and the supply side of things.
I look at all of it, but I'm bullish long term. We got too many. We don't. There was a guy at Goldman Sachs. He had a good quote. He says, "We have a molecule problem. There's just not enough of it out there for many of these commodities, and it almost doesn't matter what having a recession. There's still not enough."
As you mentioned, recession might be for a year or two, but we need this in the next 5-10 years.
Yeah, there are long-term supply problems for many commodities.
Yep, definitely. So Jim, thank you so much for your time. We've covered basically all commodities. So I guess what is one message that you'd like people to take away from our interview?
I'm more at the higher risk level because I invest in really high risk companies, because that's just where my tolerance is. And it's not what I'm doing is not really appropriate for everyone, but I think everyone should have some exposure to silver and gold. Go to your local coin store and buy some silver and just put it somewhere in your house. Bury it in the walls between the between the beams or something, or find somewhere, just stack it somewhere and forget about it, and have some metal just in your back pocket, just in case. In your
alligator filled lake.
Yeah. No one's gonna find my silver. Those alligators are sitting right on top of it. Yeah.
It's Florida style, but Jim, thank you so much. So we talked about how you're sort of co-founder of WallStreetBets. So, Wall Street Silver. Yeah. So is that the best place that people can find your work? I know you mentioned you're on Twitter, YouTube, all those platforms.
Twitter, Wall Street Silver's on Twitter, on YouTube, on Reddit, on Telegram. So we're in a lot of different platforms.
And yourself as well. I think you have your own Twitter. Is it Galactic Trader?
Yeah, but I'm more on the Wall Street Silver account than anything these days.
Okay, no problem. I'll put that all in the description below. Yeah. But Jim, thanks again.
Thank you very much.
Thank you so much for listening. And if you enjoyed the episode, please subscribe and click the bell icon so you are notified when new podcasts are released. I hope you're leaving with some great value about investing, trading, and finance. See you on the next show.